Opening a new corporation versus reusing an existing one in Ontario. I'm Mansoor Suhail, a practicing accountant and consultant with over 25 years of experience. In this video, I'll help you decide whether it's better to start a new corporation or reuse your existing one, especially if you're launching a new business partnership here in Ontario. Should you open a new corporation or use the old one? When your spouse or a business partner wants to start a venture, it's tempting to reuse an old corporation. But before you do, it's vital to understand the risks, tax consequences, and legal implications in Ontario. Reusing the existing corporation. Reusing your old corporation works best if it's completely clean, meaning all corporate and tax filings are current, no CRA issues, no debts, and no unresolved legal problems. It can save time and money, but it also carries legacy risk. Beware of inherited risks. If your old company has any past issues, they carry forward, even if ownership changes. Adding a new shareholder can trigger a deemed year-end under the Income Tax Act, forcing an early filing and possibly wiping out any loss carry-forwards. That's why many professionals recommend handling changes near the fiscal year-end. Here's what to do if you reuse your existing company. Order a corporate profile report. Confirm CRA compliance, T2, GST, HST, WSIB. Update share structure and shareholders agreement. File board resolutions and update CRA. 5. Review insurance and contracts. Contractor relationship. If you'd rather keep control, consider hiring your partner as an independent contractor. They can invoice you for their share of profits, avoiding ownership complications, but be careful not to blur the line between contractor and partner. Let us talk about Ontario Contractor Checklist. Write a formal contractor agreement covering scope, payment, and IP ownership. Avoid marketing that implies a partnership. Ensure they register for HST if revenue exceeds $30,000. Keep invoices and payments properly documented. The best option for most partnerships. For most new ventures in Ontario, incorporating a brand new company is the cleanest and safest option. You get a fresh start, no legacy risk, and full flexibility to structure shares, ownership, and tax planning properly from day one. How about the corporation checklist? Complete a NUANS name search and file articles of incorporation under the OBCA. Set up your minute book, issue shares, and record resolutions. Register for CRA business number, GST, HST, payroll, and WSIB. Open bank accounts and set up accounting. Plan for the lifetime capital gains exemption early. Which option fits you best? If you want zero risk and clean ownership, go with a new corporation. If your old company is spotless and you need speed, reuse it. If you're testing a partnership, start with a contractor arrangement. Each option works in the right context. What matters is planning it properly. Final advice for Ontario business owners: keep your records organized, minute books up to date, and avoid mixing personal with business funds. Plan your share structure with the future in mind, whether that's growth, financing, or a future sale. And when in doubt, get professional advice before making ownership changes. If you're planning to start or restructure a business in Ontario, contact us at 416-283-8774 or visit us at www.theaccountingandtax.com.